You are looking live at a daily chart of the Nasdaq, which seems like Groundhog Day all over again, right? Today it was down 181 points, 1.15%. The volume 2% below the 50-day average daily volume. You can see the volume is increasing at the last four sessions, and the Nasdaq is now 2.5% below its 50 simple moving average. And you could see, like I mentioned yesterday, the in regards to the power trend, people ask me about the power trend. It really turns off when this magenta line crosses below the 50. You don't want to wait. The 21 EMA crosses below the 50. You don't want to wait for that. This was your, the third of these, these bars here from March 8th. These are real reversals lower down to the 10 EMA. And then the reversal on April 4th, which took us down almost to the 50. And then on Monday, another similar reversal bar, which took us below the 50. And now we've had, these uh, follow through days. All indicators are that, the market's a little oversold, but it can stay oversold and can you continue selling off. This is not a, it's just a garden variety pullback, and it's just a drip, drip, drip kind of pullback. It's not a real, it's very orderly, and there's not real a lot of panic in it. It's just we made money here. And so we're gonna, we made money here on this 32% move, right? From October 26th to March 21st. And now we're just gonna take profits here in March. So that's after a 32% move, you got to expect. Now we're about 5.5% off the highs. It's only been, 3 weeks or so, 4 weeks since that high. So it needs more time and probably more price to correct. And want to look at the weekly here and just go back and review what we went through, last fall, where I'm going to zoom in here, where it made a high and then had these, these three legs down, but there was a tradable rally within these pullbacks, right? So it pulled back a couple weeks and went up a few weeks, and it pulled back a couple weeks and it went up a few weeks. Then it traded lower, and then we started this rally here. But so that's what I'm kind of seeing here, what we have now. So we made this big run, and now we pulled back, 4 weeks in a row, and it's looking pretty oversold. So I would expect one of these types of rallies here. Just a tradable rally. I was on red, and people were saying, what does that mean? I sell all my stocks. No, it just means be cautious. If you got NVIDIA at 500, you're probably going to be fine. But with corrections, we do not know how low they will go or how long they will last. So you got to be defensive. You got to protect capital. And the Nasdaq is, it's made its high. It had these reversal bars. We had a couple warning shots here, and now it's doing its thing. But like I said, it's only 5.5% off the high, and I don't know how low it will go or how long it will last. I'm thinking about 15. I don't know, 15,150, somewhere in there. I don't know. And it could take, like I said, down a little, then up, then down a little, then up, and then down a little, before we get there and maybe take off again. I'm bullish, intermediate term, but this short term stuff is, there's a lot of turbulence there. Like I say, you got to protect capital. And what I'm seeing in the morning here, it's the same thing as the old okey doke, right? Where it ramps in the morning and then they just sell off, right? It ramps, the gaps higher in the morning, then sell off. We've seen that so many times here, cap higher and then sell off into the close. I mean, just consistent, same pattern. So don't go for the okey doke. All right. Early morning gaps are not to buy, that's exit liquidity. It's to get out of positions or trim some of your positions. It's just for profit taking. So don't be buying those. All right, I'm going to go through a couple names here. I don't like kicking people when they're down or stocks, but you got to acknowledge it. Apple's one of the bigger stocks, and now it's getting back to these levels here. The 167, 165 level, which, I know people say, oh, this is a good buy here. Well, if you're the type that likes to buy low and sell high, maybe you're interested. But to me, I would wait until it stops going down and starts going back up. The low today was a 168. So it's below, it undercut this low from March 7th. So Apple is definitely in a downtrend. How do I know? All the moving averages are going due south. So we don't want to participate in anything like that. Tesla, and then people ask, why don't you go short? Why don't you go short? Well, you're kind of late if you want to go short on these. You wanted to go short on, Tesla when it got rejected here. The moving averages here at, the 205, the 184, but now you're at 155 and you want to short the thing. No, thanks. There's just not enough meat on that bone, I don't believe. Yeah. So that's just me. I mean, people want to short it and talk smack about Tesla. I don't care. I'm more into the stocks that are holding their moving averages, that are the AI stocks, which took a severe gut punch today. This is Microsoft, and they've been talking about this large addressable market, but it's got to show up in the earnings report, and it certainly did. And I'm going to get to that in a minute. Microsoft, you can see it sliced its 50 today, still in a trade range, but definitely a warning sign there for Microsoft. Meta Platforms has been, just dancing with the 500 number, and it's still there, and it closed right there at its 50 today. I mean, to me, you just got to wait till these stocks report their earnings and see how well they do. In this market environment, you can expect stocks to head lower. Like I said, the Nasdaq was 5.5% off of its high, and Meta's 7% off. So it's doing better than most. You'd expect growth stocks to be down 2 to 3 times the index. So Meta's holding up. This is one that I was looking at to buy this morning, but I was, and I didn't because of the market environment, and I was looking at the kind of like how it behaves. Each stock will show you a daily range. And today this range went up, and I'm definitely not buying these morning gaps higher. 15 minutes in, it's blasting higher. No, thank you. So it showed you it's high there at 157.08. And then I thought this was the low here at 155.38, but no, made another low at 155.34, then more lows, 54.91, and another low at 54.83. Finally got down to 154.58, and I said, nah, I started to rally back, but I'm just, I don't need to probe this market any further to know that we're in a downtrend, and this thing is holding up. Any stock that's above its 10 EMA is doing well in this tape. Anyway, Amazon is another one of these. I don't want to call them Mag 7 anymore. They're just they're not trading in as a cohort any longer. Amazon is one of the stronger ones as well. And it closed below its 21 EMA, and you can see it's only 4.5% off of its high. So with the Nasdaq 5.5% off, this thing is outperforming. All right, let's get to the gut punch from ASML today. This one hit the SMH, semiconductor, but this is an equipment stock. It's kind of like one of its kind. And somebody mentioned to me, it's from the Netherlands, you idiot. Denmark is Novo Nordisk. Yes, the Netherlands. But they reported terrible earnings. You can see the red numbers down here. Not what you would expect to see with artificial intelligence supposedly booming and such a big addressable market. These guys have the the hardware that the semiconductors need, and it's a different market than what we're going to hear tomorrow from Taiwan Semi, but still, this was a gut punch that really shook up the equipment group here. This is Applied Materials. This one was actually setting up kind of nicely. I was kind of thinking that's why ASML was going to do pretty well, because their stocks were set up, but man, this one is down 4.5%. Excuse me, I forgot to show you. This was down over 7%, okay, and it closed at in the lower quarter percentile, of its daily range. So no strength there, no buyers, down massive on terrible earnings report with massive volume. So ASML is our GOAT for the day. I did show you Applied Materials, and then Lam Research was another one in this group. LRCX, they'll report on the 24th. So, in a week from today, maybe they'll say something different. I don't know. This one sliced its 50 down more than 5% with volume, heavy volume. So this whole group got hit by ASML, KLAC. How did that one hold up? Oh boy, sliced its 50 down 5%. Yeah, ASML is a big kahuna, and it could have gone the other way. With good earnings, this thing could have popped, but it didn't. So you have to be super careful. And like I said, it hit the SMH here, which undercut the 50 as well. And then we had another casualty, ARM Holdings. This is one that we've been watching, been consolidating, and finally gave it up. And this kind of tells you, my line in the sand there was about 120, undercut that quickly, and man, massive volume here. So, look out below. This is nothing to mess with. Get out of the way. It's adios, muchachos, for me. And I've been saying that a lot lately. But oh well. Keep your head about yourself. Don't get too big. You want to play cautious here. Size matters, and you don't want to have heavy size, big size with some of these stocks, acting like that. I'm going to get to that in a minute here. But anyway, I want to go to some, I showed you plenty of carnage here. So I want to go to some stocks that are performing well. United Airlines reported a solid quarter, had a nice, I wouldn't call it, gap higher. It went above the old high. I was watching for that, the 48.73 high, and it closed a penny above it. But a 17% move, with that kind of volume, that is not to be ignored, Dan. I know it's sold off, and it's sold off, and it's not making new highs from back in the 58, but you can't ignore that move. That's a heck of a move. And United Airlines was, they got some pin action in the entire group. Delta Airlines was a beneficiary from that earnings report. And the other one was UAL. No, not UAL, you dummy. ALK, Alaska. Got a nice little pop today in AAL, American. But you can see they've sold off here. There's a sharp sell-off, and now, probably some short covering is they're going to report next week as well. Anyway, okay, congrats to the airlines. You guys, held up today. All right, and also the cruise lines, the leisure services stocks, Carnival. But you could see, yeah, it had strength today, but they've sold off mightily recently. So, one day wonders, that doesn't do much for me. Just acknowledging, what's going on in the market. Royal Caribbean, not a lot of strength there, but I will say it undercut its 50, and now today it captured it. So that's something, to take note of. And then NCLH, Norwegian cruise line, once again, boy, below the 200, rallied back above the 200. 3% move, but good for today, but these things have been out of favor. Another group that I like that, Lilly had some good news today. Is the two drug stocks, the only ones I'm entertaining right now are Eli Lilly and Novo Nordisk. They had a sleep apnea drug, they're Zepbound, I guess, it stands to reason that if you lose a ton of weight, some of your ailments will go away. And this is a sleep apnea trial. So if you, Novo had trials with cardiovascular and kidney and, sleep apnea, just to me, it's kind of logical that if you lose a lot of weight, a lot of your ailments will go away, including, knee pain and back pain, the everyday pains will go away just by losing some weight. So those stocks, I think, have a long runway. Technically, I mean, yeah, Lilly and Novo are just kind of basing here. This is still, even though it was up today, it's still below its 50, just in a base. I mean, what did I say? The Nasdaq was, it's still below 1.1% below its 50. The Nasdaq is 5.5% off its high. This is 9.9%. So, twice the index is pretty normal. I mean, that's expected. To me, this is doing nothing wrong, just behaving as it normally does. But things can change. I should go back to the Lilly chart, just say that did try to trade above the 50 today, but closed below at 1.4%. That's just kind of the market we're in right now. But you can see the consolidation here, flat base, and they're going to report earnings on the 30th, so not too far away. and we're going to hear from these companies. All right, I'm going to go to retail. Retail has been crushed recently, but this one's holding up okay. ONON, shoe company. Now you can see the earnings line is, that's not what you really want to see in an earnings line. It's really spotty, but technically it's got this cup with handle pattern is going flat, 10% off its high, while the index is 5.5% off. So to me, this one's holding up, better than most. We saw Deckers, since it's been included in the S&P 500, it's really struggled. Got downgraded, bad reaction to a downgrade. $57 or nearly 7%. Now it's just kind of trading sideways. So Deckers, they're going to report earnings on May 23, so they got a month or so, 5 weeks to report. I don't know what they're going to say, but Lululemon is one that you got to watch for these. If you're a bottom fisher, this one made a low yesterday of 330 and then closed at 338. So it kind of bounced off its lows, and today followed through a little bit there. Nearly 2%. So something I'm watching. Really, I know they have competition, but that's a massive sell-off here for a quality company. So there could be some opportunities coming up. When the market, and I say when, not if, when the market starts to behave better. The restaurant stocks holding up. CMG got this shelf type pattern, supported the 21. Obviously, they're having the 50 for 1 stock split. Holy guacamole. And the other one was, I want to show Kava. Kava just pulled back to the 50 now. So had this breakout, ran up, and now pulled back to the 50. Traded higher, now back to the 50 again. You don't want to keep bouncing off the 50 because one of these times it's going to punch through to the downside and not get the support. All right, the miners, how I feel about the miners. They're holding up. You can see it didn't even pull back to the 21 yesterday. This is a Freeport McMoran and back above the 10 today, 0.6% above the 10. So you got to acknowledge the strength here in these miners. This is Alco. I believe they report 17 today after hours. It's up 4%. Okay, I'm going to get to that in a minute. Oops, I peaked. Southern Copper. Yeah, this one didn't even trade down to the 21 yesterday. Closed near the high of the daily range, 85 percentile. You can see that daily range. And now today, as the indexes and the markets are selling off, this one just holding court here, just hanging out along its 10 EMA, surfing its moving averages in honor of the great Kelly Slater, who was retired today at the age of 52. So yeah, it's just still surfing here. TECK is one that I have on my ready list. Not real thrilled with these ones, but this one did trade down to the 21 on Tuesday. Then it bounced, then it closed. You can see 72% of the daily closing range. And then today it looked like it was going to pop, but nope. It just traded flat on the session, closed 9% of the daily range. So essentially going nowhere. All right, I got to get to the cybersecurity names. I was asked about APG, and they had a secondary offering, and sometimes secondary offerings, depending upon the market, they could be seen as a positive, to give the company cash flow. This is a 9 billion market cap with 244 million shares, but this one had a secondary offering and fell out 5% today, down to the 50. Not the end of the world, but below the 50, that's not as comfortable. If we look at the weekly chart, we could see the earnings line. They've been delivering strong earnings here, and usually the stock price will follow. The earnings, and a stock offering is just a temporary thing. It just depends on your time frame here. If you bought it back in here, this is a blip on the radar. If you just bought it, during this 3 weeks tight period, well, now you're underwater, which is pretty common for this market. Most of your buys are going to be underwater. So don't try to fight the trend. The trend is your friend when it's going up. The trend is your friend when you're going down if you're short, but I'm not quite short right now. But this looks like a quality company with cash flow, return on equity anything above 15% is pretty darn good. And I mentioned the shares outstanding. The up-down volume is 1.5, which is excellent. Anything over 1 is, above market. So, yeah, they have quite a bit of debt, so maybe the secondary will help with that. I didn't read too much into it, and I wouldn't read too much into a secondary offering. I mean, companies do it all the time, and it usually helps their balance sheets. What they have to do is report strong earnings on May 2nd. And we'll see about that. We're looking at CrowdStrike, and it's been struggling, and they've been delivering strong earnings as well. You can see the earnings line just heading straight north, very consistent earnings. But it's just the market, and companies do top when their fundamentals look great. This one had a real strange reaction during earnings, went up to 365, and it's just sold off ever since. So CrowdStrike does not look good, but it looks better than Zscaler, which is a one-way ticket to, I don't know where it's going. It just goes down every day, and think, oh, why don't you short that? Well, you probably should have shorted it up here. I don't know how low it's going to go, but I'm not interested in shorting Zscaler or Palo Alto Networks, which seems to be getting support at the, here's where you'd probably short it, right? It trades below its 200. Right, then it rallies up to it, then the next couple of days it pulls down. You think, all right, we're on, this thing's getting rejected at the 200. Now what happens? It trades back up to the 21. So shorting, it's tough shorting to me. In this market, it's tough to be short or long. And the last one, Sentinel-1, this one is back to the 200. It's pulling a Z-scaler. I don't know where these are going to stop going down, but anyway, that's it for the cybersecurity names. I did mention, short selling, and a friend of mine's short B of A, and she says, why don't you short it? To me, the meat's off this bone here. I mean, yeah, I probably should have shorted at 208 or 196, but at 170, to me, shorting gives me a negative mindset. That's just me. That's just the way I'm wired. I'm a positive person. So, wishing that bad things happen, that the plane crashes or the wheels fall off. I'm not that kind of guy. I would just rather look for companies growing their earnings over time. So that's it for me, except for in honor of the great Steve Jobs. I have one more thing. I did mention well, I'm going to go here. I mentioned the earnings from Alcoa. I haven't read the report, but obviously having a decent response here. 36.92. I mean, 36.76 after hours. Today, the high was 37.48. And then the recent high was 38.03. So you'd like to see it get above 38.03 on that move. Las Vegas Sands, they reported earnings. Let me see here. Okay, down 1% after hours. I haven't read the report. I haven't heard anything. I've just kind of been busy working here. Obviously sold off, but below the 50, below the 200. Heavy volume. You think with a decent earnings report, it would get some short covering or something. So I have to read the report, but it has these lows here, 49 and 98, 49.79 after hours, 49.68. So you don't want to have a stock making lower lows, but that's appears to be what it's doing. TFS is Discover Financial Services. It's up slightly after hours. The bank reports were pretty strong. Even JP Morgan had a good, strong report, but the stock sold off pretty sharply. It had a nice run, right? Looks like the Nasdaq had a nice run. Now it's giving it back. So you don't want to be giving stuff back, folks. Like I said, we made big money during that big run. And so you want to keep that money. You don't want to give it back. Your trading account is not a charity. All right. If you want to give to St. Jude's or the Wounded Warriors or whatever your favorite charity is, you can do that. Write them a check. But your trading account is not a charity. And if you're long and you're heavy while this thing is trending down, your profits are going to be dwindling. And most of your recent trades are going to be underwater. The trades from back here are doing fine. But like I say, you got to trim those to preserve capital and just be cautious. Okay, one last thing I have to point out. I mentioned this yesterday, the day before, last couple of sessions when this thing's going berserk, and a lot of people saying you got to get in, you got to get in. I said, no, you're playing with fire there. I don't play that game. I didn't know it was going to be down, 88% in a day, but I figured that you're playing with fire here. Yeah, yesterday This is IZM, by the way, IC Zoom Group. IZM is the ticker, a China-based provider of online B2B e-commerce platform, sales of electronic component products, whatever that means. I have no idea. It was at 52 yesterday. Today closed at 5.99. So you don't want to wake up and be 90% down. That's why I said don't mess with this stuff. Maybe if you want to day trade it, get in, get out, scalp. I try not to do that stuff because I like to enjoy life and not have a heart attack watching stocks going up and down like that. But anyway, fair warning. I don't want to be the guy say I told you so. It's just a lesson learned when you have a stock like this, which you really know nothing about, and it's going like this. It's probably, I don't want to say a pump and dump or a scam, but it's just a lot of risk involved, and you don't want to play that game. You don't have to. You could do something like Costco, right? Yeah, okay, Costco. To me, this is a much better investment than IZM or whatever it was, or a Procter and Gamble. I know I'm getting really old and stodgy here, but it's more steady Eddie. I'd much rather have something like that than your IZM, which went ballistic, whoop, and then okey doke, see you later, right? Yeah, I don't want to play the old okey doke. That's I learned my lesson a long time ago. So anyway, I'm not saying I told you, so I'm just, lessons learned. Don't try to be a hero and hold this and you're gonna be rich in a week on these things. They're fraught with risk, and I don't like taking the risk. Partly it's my age. If I was younger, I'd probably take a bite out of that, but they're really dangerous. Anyway, that's it for me. Tomorrow, Taiwan Semiconductor reports earnings. Now, this is a different, totally different animal than ASML. They could have a completely different report than ASML. Yeah, it sold off today with the news from ASML. All the semiconductor stocks did, but they could report, something completely different, completely opposite. They could raise guidance, and the SMH and the semiconductors could rip tomorrow. I'm not predicting that. I'm not saying it's going to go up or down, but you just got to keep an open mind. You have to be flexible. That's why I, went to yellow today, because I want you to be cautious, but not petrified, making a move. It's like slam on the brakes, all red, we're going off the cliff. I don't think that's the case. It's just a correction. You need to be cautious. Don't panic, and never give up. Thank you for watching.